Good afternoon, everybody. Thank you for watching the video. In this video, as you can see, we try to look at two things. As many of the option traders will tell us, that is, buying option is not a profitable venture. Selling options give you more money because many believe that a great percent of option, maybe 80 to 90% of the option expired worthless. And therefore, it is not wise to be buying options. The profitable venture is to sell options. In this program, in this channel, I want to run this program from August 11th or 2025 to August 10, 2026. During this adventure, we're going to learn whether it makes sense to be buying. Is it profitable or it's not? Now, for the selling, is it worth it? Because if you look at in most cases, when you go for 20 delta, you will see some who would go for 10 delta, but your collect is very small. Now, when the market drop down, do you make any money? Do you lose everything that you've been collecting the whole year? How do we determine? How do we solve that problem? When the market is going down and the buying power effect increase exponentially, for example, here, how do we handle those? If we would assume that here we are not on a margin. But again, when the market is dropping down, how do we protect the little profit that we collect? Because we can see that this thing can just inflate. How do we solve those problems? So this is a series of problems that we will look at. And what I put together here is that what I put together is to look at a few things. Here is the assumption. The assumption is we're going to take the Mega 7 stocks. We're going to take the Mega 7 stock, which is the Magnificent 7 stocks, and we're going to do our testing based on that, which the Mega 7 stocks is Amazon, Apple, NVIDIA, Microsoft, Tesla, Google, and Meta. What we would do, we will buy options. We will be buying two options at 70 delta, around 70 delta. We want to be around 70 delta between 90 to 100 days. We would buy when we have a positive signal from our trend trading indicators. This could be the moving average. It could be the MDI, DMI. It could be the trend tracker indicator. We would buy when those are positive, and we would sell when we have the negative signal. What would be the negative signal? The price closed below. The price closed below the indicators that we are using to buy, which could be the EMI distance, when the price closed below the 8 moving average or the 21 moving average. So the 8 moving average, when it closed below that, we may have to sell 7. We may have to sell half. And if it closed below the 21 or 20 or 21 moving average, we just close the entire position on that stock. Then the program 2, we're going to be selling stocks. We're going to be selling, instead of stocks, we're going to be selling calls and puts. because of the size of our account, we just want to limit that to options. Okay. So here's that. We would cover the loss if we lose 100% of the premium we collected. We're going to close that position. If the position lose 100%, we're gonna close it. If the position makes 50%, we're going to close it. So because we are selling, it's easier to move from 0 to 50% than 50% to 100%. So we're going to take advantage of that. When it hit 50, we're going to sell it. Okay. We buy back at 100% loss. We buy back at 100% loss or at 50%. Now, the next program that we have is we pick about 5 stocks, which are this 1, 2, 3, 4, 5, 6. So because this 6 stocks, we're going to be using these stocks throughout the year. And what are we going to do here? This is going to be monthly. This one is not going to be the 90 to 120 days. This is going to be monthly. What are we trying to do is to expose ourselves, to open ourselves to the understanding of how to adjust when the option is not going the way we want it to go. We're going to be selling and we're going to be buying. But when that happens, we would just learn how to do the adjustments. That's our intent on this. Now let's look at the market as it stands today. Remember, on option, on the 3rd Friday of every month is where you have a lot of quarterlies or monthly options expire. That's when you have the expiration date. And that week tend to be a very volatile week. The week tend to be very volatile, and that's what we are seeing. On Monday, not much of a move. On Monday, let's look at S&P here. S&P, SPX. On Monday, we see it went down. On Tuesday, you see this big candle. On Wednesday, here we are. It gapped in the morning, and we see what is happening now. It's a doji. So we have to come to the understanding that this week is going to be a volatile week. That's the common. We cannot predict, but we know that's very common because it's the option expiration week. Now, let's go through the market and see what we have. Here we see that a little bit of a doji here. Are we going up? Are we going down? We don't know. But that's what we are seeing. Now, let's look at the chill. Let me get this out of the way. Okay. So let's look at chills. Just the NASDAQ. We basically chill and S&P showing similar thing. Gap up, it comes down, which is bearish, but again, we just follow what we are seeing. Now let's look at the DJX, Dow Jones. Dow Jones is going through this little bit of sideline. It's not doing well as the other stock, but yeah, it is. Now, let's go to the portfolio. In this portfolio, as I indicated, our intent is to buy and sell and do adjustments. Here, we are not determining which is profitable. Here, we are trying to see if you're going to be selling stocks, can you make the adjustments? Because it is going to happen all the time. You're going to sell and the market is going to sell off. How you handle those situations? This is what we're going to learn us. This is where we're going to do different things, trying to see how we can capture those profits or how we can limit the losses, because it's going to happen no matter what. Now, okay, so we look at Boeing. We see that Boeing, we started this last week. I think it was last week, Friday. Now, here we see we sold one at 23 for 23 days. Right now is 22%. But as we indicated, we sold it at the market price here, and this is our traded amount. Oh, this is the traded amount. This is price that this is the premium that we collected. We collected $2.62, 262. And right now we see that it's selling at $2 and a cent. 56, we collected 56. Today is a down day for the Boeing. BA. We see that today is a down day. It gapped and it's coming down. Let's see whether we are in trouble or we're not. Now we can see a 22 delta. So we are fine. What did we put anything? So we sold at what delta? 25 delta. We sold at 25 delta. Right now is 22. No worry in that. We move out. We don't have to worry about anything on Boeing. So BITO, this is Bitcoin's ETF. BITO. BITO is a Bitcoin ETF. So it's very, very volatile stock. Volatile ETF. You can see because it followed the Bitcoins. Whoever, you have to have a very strong gut to be able to handle the Bitcoins. But if you got it strong enough, you can see Bitcoin is way up. So here, this other indicator, which is more of EMA crossover. It's a specific EMA crossover. And this other one is our custom indicator. Right now, it's giving a positive signal. If we want to go in to buy, it's giving us that positive signal that, yep, this is ready to go to buy. But you can see a significant resistance here. But again, from here to here, you can profit from that. Now we are already in there. Let's see. Here is we bought 70 calls. Let's see, what did we put a note? Okay, so we bought at 65 delta. We purchased at 65 delta. Right now, our delta is 77, which is good. The delta is increasing, more money we make. And today is for the Bitcoins is going up. Now, remember, we said when we sold, we get out of that trade when we hit 50. Here, we didn't buy, we didn't sell. We purchased this option. Therefore, we would continue staying in here until we see this thing turn red. One, here we see this is still red, but we would until it turned red. Number two, or if we see, usually this thing would move up. If we see that turn, this indicator down here, this one, if we see this cross over, this we would sell half. But at this point, this is not applicable because the indicator is not following it yet. Because, I mean, you can see this is not a trend. This usually follows trends, okay? So that would not work. Then this third option that we have, if this indicator down here, if the EMA turn red, we would get out of the trade. So those are the three things. We are doing what? We are not. So what are we doing? We are not trading our P&L, we are trading a strategy. And that's our strategy that I indicated. Now, here we have 59%, which is still good. DIA, let's look at Dow Jones. Here, Dow Jones went up today. And we're currently making about 42% in it. And what did we do? We buy a call. You can see it's 23 days right now to expiration. So we entered in this. We went into this 1, 2, 3, 4 last Friday. We went in there last Friday. That's when we started the program itself. Now, here we say delta is 76. We find no worry in that. No worry in there. Let's go to the next one. Sorry, it's making that noise. That's I think my battery, I don't know, sometimes whether it's not plugged right or so, but it will make this noise. Okay, let's move to the next one. We move to the next. Close this. Let's go to gold. We include, if you look at this, we try to capture the market. Gold usually go against the stocks. So we bring the gold in, we bring the DIA, we bring because the market itself, DIA, we bring the BITO, which is the Bitcoin. We look at the Home Depot. Home Depot, and again, Boeing. Boeing has been struggling, so we put those in there. But Home Depot is very volatile. So we put those in to help us make adjustments, learn how when things are not going right. You build confidence when you know what to do when things are not going right. You can stay as optimistic about stock market or pessimistic about stock market or your portfolio. But if you don't know what to do when things are not going right, you're not going to build that confidence. Confidence is knowing what to do when things are going down the hill, when things are going haywire, when things are not going the way we wanted it. That's where confidence comes into play. Okay. Now let's look at the gold. Gold is going down. We see that the gold is right now 35%. 35% down. Again, still within our acceptable range. If it hit 100, we would get out of it. But it is 35, we still stay. Okay, so GLD. So let's look at the position. And now we see that it's going on the sideways. We don't have to worry. If it is continue going down, then that's when we have to worry. What are we going to do? Are we going to do an adjustment? Are we going to keep it? But it's going sideways. We will keep it. HD. Okay. Here is one thing in our program here. We see that Home Depot is up 65%. And remember, we sold an option. We sold a call. No, we sold a put. Now, it's not until 23 days, but based on our program, we would need to sell this. We pocket the $312. Then we're going to sell another one at a different. So basically, we are rolling this. We are doing a roll. So we're going to learn how to roll. We're going to close this and create a new one. That's what roll is all about. When you hear, oh, you need to roll, that's what it is about. You close the existing one, create a new one. All right. So let's look at Home Depot. HD. So Home Depot is going into earnings. Now, the question is, if this is my personal account, there's no way I'll continue with this trade. I would sell this. Possibly I'll wait, try to get some of those volatility in there to expand. But we sold. Now, if you sell a stock and the volatility goes up, what happened? Volatility is the inverse. You sold it, the volatility. If you have a stock, okay, and the volatility, if you have an option, volatility went up, what happened to the price? It goes up with the price. So if you sold an option and the volatility went up, then you lose more because you sold it. So it's inversely proportionate to the option position. Because we have a negative option, negative delta. When the volatility goes up, it hits you hard. So for me, if this is my actual account, I would not create another one. But these are tests. We are testing how to handle situations. So therefore, we're going to close this. We will roll over. So now let's go. Right now, our delta is at what level? What's our delta? It's right here. Sold this. Right now it's 10 delta. We're going to purchase this back and then open another one somewhere around to 390. So let's look at what 390 is. 390. So 390 is all the way here. Do we believe that this thing could come down? Yes. So we want to be somewhere around this, knowing that if it hits this point, that's not good. Maybe 380. What is 380 going to do for us? Let's look at 380. So here, 380 is 17. Since we may be able to adjust, we're going to go with 390. Let's go with 390. Yeah, we can adjust. If things goes bad, because it's going to force us to learn what to do when things are not good. So we're going to go to 390. We're going to buy this back and then sell 390. All right, so let's go. Follow me here. Let's do that. Okay, Thinkorswim. You can use this on any software, any trading software, but I happen to use the Thinkorswim. We're gonna buy back. So here is create a rolling order. So we're gonna sell. So now you can see we are buying this and we're going to sell 390. What do you agree on? Yeah, 390. It's 390 puts. $390. Now we're going to have a credit of $4. Okay. 390. Let me move this out of the way. Now let's try that. We sold 390, we buy that. And we're gonna get a credit back of $4. Okay, what do we do here? So here is our credit. Oh, wait a minute. Wait a minute. I hope it doesn't go through because we're buying it, but where is it changing the thing? Let me cancel it. Cancel, cancel. I don't need to cancel, but okay, let's go back. Sorry. Here, because we need to look at the date. Create a rolling order, sell 39. We're gonna sell 390, but we don't want the date to change. 390. We still want to keep the date. It doesn't matter. 390, and we still want to keep September 5th. $390, we keep September 5th, it gives us back 334. So what is that telling us here? We have a 300, it's giving us a very small amount. What is that selling right now? The 390. Yeah, we're buying back. We're buying back because we still have this amount there. And we rolling. Okay. Why are we doing that? As I said, it's easier to go from 0 to 50 than from 50 to 100. So since we have that 50, we take it, we roll it up again. Okay. Set. So we're not getting anything there. We want to adjust it a little bit. All right, perfect. We got that. Good, 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 good. So we make our first adjustment together. We went in, take it out, and sold. Okay. So we have some $15 there. All right, good. Next. So let's go to our next one. We sold ports. Sometimes it can be distracting. Now we are done here. Let's go to our okay, we are in the margin account. Good. All right, let's look at our Apple. Okay, let's bring them on. Let's bring the margin account. Let's bring the margin account. We can look at it all at the same time. Did I do all account? All right. Now we have the Apple here. We sold a put here. We bought a call, and it's 2-2. Okay, the same day, basically the same time. Now we have 18. We gain 18%. Here we have 8%. What do we learn? We sold, we buy, and the percent are higher than each other. How is that possible? Well, look at here. Look at the profit. 180, and then this one, 415. Here, the buying power is about 5,000. How much did we purchase this one? About 2005. 2005, because that's the market value when we purchase. No, 2,300. Here, our buying power effect is about 5,000. But this one, we only use 2,300. Now you can see, depending on the size of your account, which one may work. And again, we saw a more profit. Is that consistent? We don't know. It's a test. It's a research lab. We are in a research lab trying to see what we've been told for this years. How can we take advantage of those? Now, the Apple is positive here. Today is a positive day on the Apple side. and therefore we would not have any problem. You can see it's positive. So let's go look. AAPL. Jumping up. Apple is going all the way. So nothing to worry here, except the fact that we enjoy whatever we get. It's less than the 50% that we would need to close the account. Let's go to Amazon. Amazon, we see that Amazon has a positive 14%, about $200 here. On this side, we see the opposite. On this side, we are seeing 2.4% profit, and for only 110. What is going on? It's kind of weird because on the Apple side, we see that buying calls is more profitable than selling puts. But on the Amazon side, same day, same time, we are seeing Amazon having the profit for selling is higher. So let's look what happened there. What happened? Because we can see 100 days here. Amazon, 100 days there, and they are two. We sold, we buy, we sold. But now it requires us 7,000 buying power effect today. This thing changed. That's why sometimes when you sell things and you don't have a balance, you get in trouble. You get in the margin problem because this thing can go up and down. But when we buy, the trade price was 2,280. 2,280. Okay. 2,080. 22. It's $22. Now we see that the value has increased. So 22, which is 2,000, 22,000, 2,200. Okay, 2,200. But the buying power effect is 7,000. It has an impact on what you have. But we see the profit is significant different. Now, what is causing that? What is causing that? Okay. It's causing that AMZN. AMZN. Amazon is going on a sideways. So therefore, the theta is giving us the money. It's going sideways. It's not coming down. We purchase it right here. And then it's higher here. But you can see that's why when it's going sideways, it's good for selling. The sellers are happy when the stock is going on a sideways. Sellers are happy when the stocks are going sideways. Sellers are happy when the stock is going sideways. Buyers are happy when the stock is trending up. Because that's what Apple is telling us. Those are the two things. Then the next one, we look at the next one, Google. When we look at Google, it's 7%, $100. For the same one, for Google, it's only 2%, and it's 101. So very close. We haven't seen much of a change in Google. We haven't seen much of a change in Google because this is Google right here. And if we look here, not much of a difference. Okay, let me remove those out. So let's open Google. Right now, Google is only showing that. So no adjustment is needed in either one. Here, Google is losing. And then for this one also, Google is losing. But the amounts are too small. Let's see what is going on. GOO. Oof, the candles, what is going on? Wow, that's a huge one. Okay. That's a huge one. All right. So we're going to see what is going to happen. Here in our program, we stated that when this thing turns green, we should get out. But it's not the end of the day yet. And again, we just had this. We just had this, but it's against the law. When you set this system, then you set a system, you should adhere to it. But the reason this thing would be harder, if we start here, and this is red for sure today, we will get out. But we saw that we started here. So we just started. But we know that for Google, it's time for us to get out, to just buy back. But you can see, in the normal circumstances, we will get out. It's only 110. So we will continue to test. No, not this one, here. So in the normal circumstances, we need to get out of Google at a small loss. Yes, if we start from where we normally go, we get a signal to get out. Let's move to Meta. We go to Meta. So on the Meta side, what do we see on the Meta side? On the Meta, we see some positive numbers. Look at that. Look at the Meta. Meta is giving us at 11, just 11%, is giving us 1,942 right now. That's how much we have in Meta. And our buying, we bought it for 8,500. That's 8,500 that we put in. We said, here it is. Now, at this point in time, we need to have 17,000 to maintain that account. That's our buying power effect. 17,000. Our buying power effect is 17,000. All right? 17,000 buying power effect. But Meta is doing fine. You don't have to worry. META. Meta is fine. We saw that the market is coming down. We all saw that. So, but no worry. Don't worry on Meta. And no signal to get out. Okay? So let's move on. Microsoft, MSFT, Microsoft. So we have seen the entire market is coming down. Remember the volatile week that we are facing. Protect your profits if you have any. It's going to be a volatile week. Doesn't mean you're going to be losing, but just keep eye on. If you have a huge profit, you want to cover the profit. All right. So we have a Microsoft here. Microsoft is positive, 155, but today we lose about 300. It's okay. So part of it, process. Now, here, we only, in here, we didn't make anything. Still, we lose about $45. So just by looking, just by the time that we spent together, without knowing anything about Microsoft, without looking at the chart today, you didn't look at it for the whole week. Just by looking at this, what can you tell may be happening on the micro and the Microsoft side? If we look at the Microsoft chart, just by looking at this, my assumption is that Microsoft is going on a sideways because the sellers are enjoying themselves while the buyers are not happy. It's giving us but negative number because the numbers is changing all the time now. But you can see the sellers are enjoying a little bit of theta decay. Therefore, just by looking at the numbers, I think Microsoft is going on the sideways. Here it is. We sold this thing here and we didn't go anywhere. That's why the sellers are enjoying. Because for them, it doesn't matter. The stock doesn't have to go up. For them to still laugh at the bank. As a buyer, it has to go up or you're going to be losing. So those are the two. Now, let's go to the next one. NVIDIA. What is NVIDIA telling us? NVIDIA, the most popular stock right now. We saw that NVIDIA is losing some money. We're losing a little bit of money there, about 1%. Small, yeah, but based on our research. And for NVIDIA is showing a little bit more negative. Here, this is telling us that when we sold that stock, it went up and it now is coming down. Very close line. Not much of a difference. So now we look at NVIDIA. So you can see we sold or purchased here and we didn't go anywhere. Now, again, if we start this here, around here or here, we will get out of NVIDIA trade also. We started here. We started this on last Friday. Therefore, we don't have to worry about anything. We just go. But if we start, we may have to go because we get the signal that it's time to get out. Okay. All right. Now let's go to the next one. So nothing to worry about NVIDIA. Even though we got that sell signal, we would keep it. And you can see those internet is telling me that it's time to get out. Now let's move to is that the final one? Let's move to the final one, Tesla. Tesla is doing us some favor here. We have 17% gain in Tesla, $700. And today, it's coming down a little, but not much. Okay. Yesterday was a good day. So today, Tesla decided that it's going to come down, but not like the other ones. Okay. Now, here we see Tesla 11%. How much? 1,200. 1,200. We purchased Tesla at 5,400. But right now, if you own that Tesla, if you sold Tesla, you need to have $9,000 sitting in that account so that you will be in trouble. Is that not a margin? I don't think it's a margin account, but that's what you are expected to have available. But Tesla is doing well, 1,200, and here 700. Now, what do we learn from this? Few things that we learned today. One, when stocks are going on a sideways, in a sideways market, it may be profitable to sell stocks than buying. When I say stocks, which could be the selling calls, or on the option side, it could be selling calls and selling puts or buying calls. Yes, selling puts or buying calls, or it could be, on the side market, you want to sell, basically. On the side market, you want to sell. In the trending market, you want to buy. That's our little finding from just our today's session. We may see this change. As time goes by, we may see that, you know what? what our assumption was is wrong. Well, this is what our assumption is going to be until we came across some other things that prove us wrong. That on a side market, in a sideways market, sell. In a strong trending market, buy. Yes, strong trending market, buy. Sideways market, sell. If anything that we can go from this is that. And we will continue doing research. We will continue testing that idea. That's hypothesis and see if it makes sense. Is it correct? Is it right? So we will stop here until another time. And again, if you remember, we did a roll. And what is the roll? You sell the existing one, or you buy the existing one. And if you have a put, if you sell a put to roll, you would buy back the existing position and you create a new position. That new position could be in the same period, different price level or strike price, or it could be a same strike price but different date, or different strike price, different dates. You could have all those. But this is what we learned from our research today, and we would continue this journey up to the end until we all become an expert in selling and buying options. Thank you.